Me sound is good. Okay. A lot of background sound too. It might be bad. Anyway, as I mentioned, Nina, thank you for joining Patreon. Fear and Greed is 16. Yesterday was 10. Ridiculous. And the stock market is 20. Absolutely horrible. We had the worst Feb in crypto ever, everybody. Feb is normally a very good up month, and it was brutal. And you can see here the actual numbers of how bad it was. 18.2% drop in Feb 2025. The previous worst was 2020, 8.62%, but that was C19 times, for those of you who may remember way back when. Anyway, can you believe it's 5 years since that actually happened? Stunning how time flies. Anyhow, Ethereum down 32.5%. Ethereum lost a third of its market cap in the month of Feb. Absolutely shocking. I hope the sound is back. I think everybody's working now. Sound is okay. Sorry about that. Technical difficulties. Trying some new technology here too. Anyway, let's move on with the story. Crypto makes a huge comeback. We went down as low. Let me check the chart for Bitcoin. Yesterday, it had a horrific day. We were down to $78,000. Okay, 78 grand. And Bitcoin bounced back $6,000. I know it doesn't look like it, like Bitcoin's flat. What's the deal? It's actually exactly at this level right now. But to bounce up 6 grand in hours is huge. So anyway, we'll take that as a win. Also, Solana up 7.5%, back up to 146. I did notice actually a very interesting chart where Bitcoin kept on tanking and Solana stopped selling off yesterday, which was interesting to see too. Anyway, let's move on with the story. What's happening? Well, whales are buying the Bitcoin dip, not the ETFs. TradFi normally dumps at the bottom because they get very nervous, but the whales have bought the dip and they spent $1.3 billion when the price fell below 90,000. And as I always say, watch what the whales do because they are smarter than the average fish. Excuse the pun. They are very good. Clint, the Thirsty Sponge, thank you up there in Canada. Appreciate you all being here. Sorry for being a bit late. Lots of stuff going on. Now, in other news too, let me see if I can turn this off. Not that one, that one. Yeah, so you can see, these are the proxies, which we track here. The proxies jumped back. Marathon fell to 1.07 NAV premium yesterday or the day before. And then earnings were blockbuster. 1.07 and then bounced back to 1.23 just in 24 hours, which was stunning. We see MicroStrategy, and I know MicroStrategy's got murdered. Yes, I've got a big bag of it. Yes, I've been holding, haven't been selling, but that went back. It fell down to under 1.5. Now it's back at 1.6. All the proxies are coming back strong, which is really good to see. And again, we should see where they go in the near future. Now, the big news today, actually lots of big news. This is Global M2. Shout out to Raoul Powell. This is his chart from Global Macro Investor. And Bitcoin price is on the right-hand side, and the Global M2 in billions of dollars is on the left-hand side. They are out of kilter. The Global M2 normally is 10 weeks ahead, but you'll see in the pink line for Bitcoin, it was a little bit overinflated based on Global M2 because people were expecting a strategic Bitcoin reserve, and that held it up when that didn't look like it was coming. And then the Bybit hack and all the other stuff, it took us down. But remember, we are now very far behind, lagging behind Global M2, and we will catch up, okay? The bull market is not over. I spent the last 2 weeks telling people that it's not over. Everybody's saying it's over, it's done, I'm packing my bags, I'm going home, I'm finished. Nope, it's not at all. Watch the money. And this should continue as well. Not just Global M2 as well. Global Liquidity is up 4% year to date. Doesn't sound like a lot, but remember, it's $100 trillion number. To add 4% is adding many, many billions. Anyway, moving on from there, we'll watch Bitcoin follow Liquidity and Global M2. Now, the big question that many people have is how long before Bitcoin recovers? Shout out to Econometrics. They had a really cool little study on this one. And to get to the answer of this, you have to look at kind of what happened in the past. Now, in the past, sorry about the banging, everybody. The duration of a typical correction from historical data, if Bitcoin falls 20 to 40%, the time for it to get back to where it was at all-time high is about 68 days. And the current correction so far is 38 days. So the good news for you, ladies and gentlemen, we've got 30 days left. We are over halfway through the correction if we follow typical patterns. However, Bitcoin's recovery speed is generally faster than that of the NASDAQ and big tech, but they did move fast into the close today. We'll talk about that in a minute. But again, 30 days left, maybe less. We'll see. We still have a very weak macro, which we'll touch on as well. So there's a couple of dark clouds on the horizon, but we could be back in business in 30 days. So be patient. March should be good. February sucked. March should get a lot better. Thank you, Dog One. Now, another crazy good news on a Friday. Blackrock. Guess what they did? They decided to have a little party. Now, what they've done, BlackRock have this thing called their model portfolio. A lot of people kind of subscribe to BlackRock for them to manage their money. And I think it's about 15 or 12% of their entire $11.5 trillion under management is in this model portfolio, where they basically tell people what to buy. They hand over $1 billion and they allocate it for them. But guess what? BlackRock is adding a 1 to 2% allocation to the iShares Bitcoin Trust. Okay. And that is one of its largest target allocation portfolios. And the move will help us go higher. Now, what's interesting is the way they announced it today after the Bitcoin price crashed. We'll see. Maybe that's all part of the plan. Who knows? If you're paranoid, you might think, maybe BlackRock brought the price down in order to make the allocations so that the clients will get better performance when they allocate 2% to Bitcoin. I don't know, but it's huge. But it's at least $150 billion. You can do the math yourself. 2% of $150 billion, quite a bit. $3 billion will be coming from this. And again, it's a perpetual bid because as the AUM grows for BlackRock, the allocations are the same. More money will come into Bitcoin, which is great news. Also, another little bit of crypto news. CME is launching their Sol futures in March 17th. It's happening. Remember, the futures precede the spot ETF. Spot ETF's coming, and that's going to be big for crypto. Now, another little fun chart too. For those car fans out there, I thought this was fascinating. Ferrari now eclipses Volkswagen in terms of market cap. But when you look at the data, I think Volkswagen make about 4.8 million cars. And Ferrari make 13,000. And the market cap is far higher for Ferrari. So the traditional car companies like Volkswagen are in hot water. Of course, Ferrari is a luxury brand. They sell expensive cars. But I thought that was an interesting Friday fire story. Now, stocks are on fire and they ran into the close. Today we were up because the PCE numbers were good. I reported on that on Patreon this morning. Basically, less fear in the market and knew it was going to pump. Been up since 4 a.m. and it did. But what happened in the last hour of the markets being open in the United States was kind of stunning. Nothing short of amazing. But a lot of big names are up. Tesla up 4%, Amazon 1.5%, Nvidia up 4%. Like there was worry about their earnings not being good. It was good. They beat, etc. But basically green across the board with the exception of one of those companies in the middle. I don't know what that is. Software, whatever. Anyway, this is the surge of what it looked like from the Kobasi letter into the last hour today. The S&P surged over 100 points and the dip buyers were coming in hard. A lot of people believe, okay, we had a brutal Feb. And by the way, it was brutal for not just crypto, it was brutal for everybody. But people didn't want the last day of the month not to be in a position and not going into the weekend, not being long or have their bags packed. So a lot of people just went crazy, frenetic buying in the last hour of the stock market being open. And a little bit of Tesla news too. Tesla has been aggressively hiring for their humanoid robot, and there's 70 job openings all over the world. So this will be interesting. This thing is real. It's not priced in. Robotaxis are real, not priced in. Robotaxis are happening in June. It's all happening. And Elon is making himself very unpopular with half the planet, but I don't care because it brings the price down so we can stack at a cheaper price. A lot of people that don't quite get the psychology of that, but it's worth spending a second on. You know, the stock was $485 2 months ago, and then it's under like 280. You know, now that's an opportunity to get like $205 off a stock. People worry, but when you have a medium-term time frame, it's a buying opportunity. It's a sale you have to take advantage of. So for me, it's good news. Anyway, another piece of cool Friday Fire news. Arduino, who is the CEO of Tether, he had something very profound to say. He said, one day, Tether will be useless. I was like, what? Yeah, because he predicts USDT Tether will eventually fade away as fiat currencies all collapse. And this will give way to the Bitcoin's supremacy out there. And he champions Bitcoin resilience, etc., highlighting integration with the Lightning Network and a lot of other good stuff. This was very stunning. And remember, Tether have a huge amount of Bitcoin as well on their balance sheet because they take their treasury earnings, interest earnings, and they allocate to Bitcoin and they stack away. And they've been doing that for years. Very clever. So either way, I thought that was quite a profound thing to say. Now, speaking of melting ice cubes, because Tether believe Tether will go away as fiat will crash to zero. But guess what? Berkshire Hathaway, their cash pile continues to grow. And a lot of people say, oh, well, maybe Warren Buffett knows something. But it made me go back in time. And I went back to 2005, which is on this chart. And that was the last time they had a huge stack of cash. But they did get into the market. They did deploy their cash. But by the time they deployed it, they missed 75% of the gains in the market. And then when they were almost fully deployed, the market crashed again into 2008, 2009 global financial crisis. So I wouldn't worry too much about the Berkshire pile because their timing is not perfect and they're late to the game and they're super conservative. So don't let that freak you out. I get that question a lot these days. Now, there is some bad macro news, however. The huge U.S. trade deficit was highlighted. This would alarm some people, but when you understand the mechanics behind it, it's actually not so alarming. I think part of the reason for this is the threat of tariffs. So when the tariff threat came in like a month ago, a lot of companies like, say, General Motors and Ford, they have to import stuff, try to get the products in before the tariffs go into effect. And I think this triggered a lot of this. I'm not sure, I can't put my finger on it, but my gut tells me that's the reason for this trade deficit, but it's not good. But there is, hey, Vitruvian Maniac, thank you for coming. There is other bad news too. The GDPNow model forecasts a minus 1.5% GDP growth rate. And as I've been saying for a long time, if the US government didn't spend so much, GDP would have been minus 7% anyway. But that is scaring some people. And again, one indicator doesn't make a trend. This could change again in a week or two. We shall see. But GDP is not looking good. The trade deficit is not looking good. A lot of macro, as we've been warning for a long time, is horrible, really bad. But hopefully it'll get better. And then one final piece of news before meme of the week. 70% of voters think government expenditures are filled with waste and agree with cutting $1 trillion in expenses. So this has been quite political in the US, but it's good to see the majority believe in not wasting money. And this challenge about money. So we should not waste money, but invest. Maybe invest in part of the people. But we also know historically the government does not know how to invest money. And for every $4 they spend, they generate $1 in return. So that's nearly in line with the 70% that agree with no waste. 75% of the money that government spends is wasted. So that does need to change. And final fun story of the day. Shout out to Michael Saylor. He actually tweeted this yesterday. He's in San Francisco, not far from me here. He said, sell a kidney if you must, but keep the Bitcoin. So, of course, he's a Bitcoin maxi, Bitcoin bull. And of course, do not ever jeopardize your health for material wealth, because health is everything. Anyway, thank you all for coming. Sorry about any background noise. Hope it wasn't too bad. Sorry about the audio. And I'll see you all tomorrow, or recap the week. Thank you once again to TND Tesla and Sean Donnelly and the whole crew out there. Vitruvian Music, Dog One, and K8. Have a good night, everybody. See you.